Hey, what's up? What's up, everyone? Welcome to today's analysis. Hope everyone is well. I hope you can hear me loud and clear. So, welcome to another day here at Financial Hub Analysis. Today is Wednesday, 2nd after holiday yesterday. Of course, if you're a trader, there's no holiday for us in the markets. Market still moved quite a bit yesterday, up, down, depending on the pairs you normally trade. So, it is what it is. But welcome to today's analysis. I see a good number of people have tuned up. As usual, I'll just go through the usual pairs that I normally go through. Maybe do an extensive analysis on a few other pairs because today I'll be doing the analysis alone. Ken has some other errands to do, but I'll just go through the analysis and see what we have in store. What trades we have. I have one trade running currently. That's on USD card. Apart from that, I take very minimal trades and put a good risk reward on them. So most of the time you'll find me not with the trade. You'll find me sitting on cash. We keep saying sitting on cash is a good position because you're waiting for the market to go into the corner and your work is just to go and pick that money. That also comes from experience and takes time to understand the different setups you're normally looking for according to your analysis and your approach in the markets. Once you find that edge, then you know which trades to be taking, which ones to be avoiding. So the trade I've taken is not a trade that I usually take. It's sort of I'll show you when I go down to the breakdown. It's sort of something the trade that I don't really take, but it looked like quite a clean trade. So I have it running with good risk reward. But most of the time you won't find me taking such trades because basically I've gone against the trend. I've taken a buy on that because of a few reasons behind it. So I'll take you through my thought process on that pair. How I've taken that trade. I had a trade on it earlier on that I took last week. I got stopped out. Was it yesterday or Monday? I think it was yesterday in the afternoon. And I got another trade again in the evening. So that's how I took that trade. Apart from that, fundamentally, what are we expecting? We had some interest rates from Bank RBA. So interest rates, Reserve Bank of Australia yesterday, which didn't really affect the market that much. Apart from that, this week we're waiting for NFP on Friday. You know that's a very important news data that is coming out about unemployment, employment change, and all that. But apart from that, I'll get straight into the analysis. Don't mind my hair. I need to get a haircut. It's shaggy and all, but the market does not care if you have hair or not. So let me analyze the market for you. But employment does. Employed people matter if you shave or not. That is why I do not look for employment, because you do not have freedom. Anyway, that's on a light note. So allow me to share my screen. I think I'll start with GJ. Okay, so just give it a second if it's coming up. I start with GJ, then look at something on GU that I wanted to share. I don't trade this pair, so I just don't understand. I've been telling you this since, was it Friday or something? But I'm seeing it panning out quite well. I see some bearish momentum coming on this one. So if you allow me to expand my screen. We've been having a bearish run since last year, April. So since the bottoming around down here, okay? So just to give it some time, there we go. So you can see this bottoming down here, that was in March. So for the past 1 year, 2 months or so, bullish momentum, good run on this one. If you've been buying the corrections, it's been a very good run. We've broken significant support and resistance levels to the upside. But something you should pay attention to, the trend is referring to the trend breaks, but at the same time, follow turning points, okay? So you have to watch some levels. Even if the trend is different, just don't hold a trade or a pair till infinity. You have to have certain targets, certain levels. So this was certainly a target. This was a target over here and market over here. If I go to the forward chart. So I've been doing that top-down analysis, just showing you what is happening. So you see this significant level, okay? Let me go back to the daily chart so that you can see it clearly. So you see this significant resistance level over here where market topped and then fell all this strong way. Once you got that break above, okay? Once you broke above this, it started creating a pattern over here, okay? That is seen on the 4-hour chart. That's what you're seeing on my 4-hour chart here. So ever since we broke this level, we got that breakout retest, but market has been going in the form of that market structure. So you know me, I'm always looking for what structures the market forming. Okay, so this is sort of an expanding diagonal triangle. So this is an expanding triangle, and this inner one is a diagonal triangle, a converging diagonal triangle. So they're opposite of one another. You can see this one is expanding outwards, but this inner one is expanding inwards. So once we had this breakout, you can see this first touch over here, second touch, and a beautiful third touch. Did that analysis, was showing market coming within this wedge-like formation. So you can see also that first touch, third touch, fourth touch. So there's a lot of confluence over here. And basically, you see this pump that we have here. This is normally what we call an explosion. I keep struggling to say that word. Exhaustion momentum to the upside, where basically we just have that last run and people end up coming out. So we expect some shorts over here. Expect this market to continue falling. Of course, we can have some corrections along the way, but ultimately, long term on the daily chart, since we've hit this resistance level up here, I expect some correction to come into this market. At least even we can come back and correct back to this level. Okay, so back to the 147.8 level, around this level over here. That's a quick run. That's about 800 pips from where we currently are. So that's what I'm watching on this one. If I got GU, people who trade GU also don't trade this one. But something I've been talking about, pay attention to levels, okay? So also this one, just like GJ, we've been having that uptrend, quite smooth, quite beautiful. You can see that higher highs and higher lows, higher highs and higher lows, getting that touch here, okay? So we've been unable to break this level, which was formed earlier on in February. So this was the yearly highs, and currently that's where market has been dangling over here. For the past few weeks, this has been quite a tough pair to trade because it's not really forming that direction of bus. But maybe if you're a range-bound trader, people who trade within range, maybe you've been having a good time on that one. But people who look for trends and all that, this one has been quite tough. So what I was watching, remember I always say, when we're approaching a key level, the key question to ask yourself is, how are we approaching that level? What is the market giving me? What pattern is forming? Are we decreasing in volume or increasing in volume? Clearly, this is a decrease in volume. So either of two things can happen. Either market can come consolidate here for some while, get that people to short around here, then all of a sudden break to the upside, or actually get that consolidation here and then fall to the downside. If I go to the 4-hour chart, so I hope you can hear me. I hope I'm not on mute. If I go to the 4-hour chart, same thing on this one. Broke a key level, entered into a pattern formation, okay? So you can see this resistance pattern. Market came into this resistance pattern. Remember what I'm normally telling you when you're having sideways movement. The last formation during a sideways movement, if you have a triangular formation, it's normally an indication that that pattern is normally coming to an end, that sideways movement. This is what we got here. We had that breakout to the upside. We broke this key level, retested it just like what I showed you on GJ, and then market has been sort of forming this sideways movement. So basically that's giving us a breakout to the upside, but not a continuation, a momentum to that side, okay? And normally what happens over there, you can normally see some corrections coming in. Let me put this up here. 1 hour. So what I was paying attention to on this one for the people who trade it, what you can be watching. So clearly what you're seeing here, you can see this first touch, second touch, third touch over here, fourth touch, got that slight breakout. Normally when you see a breakout of such a level, you normally expect momentum to continue. Same thing you can see over here, okay? So a breakout and a continuation of that breakout. But normally when you get a breakout, I've been trapped in many trades like this before, a breakout and then a shooting star formation and then a follow back into that level, okay? Normally when you see that, you don't want to be holding your longs anymore, okay? Because that's a strong indication that this level has been rejected. This was a quick stop loss hunt. So people who had stops around here, they were quickly hunted and eventually market went in that direction, okay? So you see that quick fall, better seen on the 1 hour chart if you go on it. Look at that pattern formation. Let's go back here. You can see that. So clear, touch here, breakout, and a quick drop back below. So, okay. So be paying attention to such. If you see such a breakout, don't be holding to your bias. Your bias that you had entered this long, it was actually a good trade, but immediately market fell back below. It was a caution for you to remain in that trade, okay? So GU, if you get a breakout of this trend line, so you can see this first touch, second touch, third touch. If you get a breakout, then this market can fall back, if I go to the forward chart, to retest this level down here. Okay, so you can go all the way to retest this level if we get that breakout to the downside. If not, follow the trend. This level can still hold a good risk reward to take you further up. But I don't trade this pair much, so I don't know fundamentally what is pushing it. I leave this pair to Ken and the rest of the people who trade it. If I go to my usual pairs, Aussie dollar, maybe let me start with USD card, show you the trade I have taken on this one. So I took this trade yesterday. So remember, I've been showing you on the daily charts, there's this pattern that has been forming, okay? So this lower lows, lower highs, according to my Elliott wave count, I believe we're coming to the end of the fifth wave down here. So remember, I keep saying this one is quite subjective, but if you're able to count the numbers properly, which was able to count them, I think this weekend, I didn't have them at first. So if you look at my previous analysis, I've not been having that Elliott wave count. I've been following more of market structure, but I believe down here with this consolidation that is happening, market is coming to an end. So if I zoom out something, let's go to the 1 week chart. Something you need to pay attention to is the level we currently are, okay? So long term, we've been ranging bound ever since 2015. We've been within the 1.2 level and the 1.46 level. So a lot of sideways movement, okay? So we either get a trend to the upside or a trend to the downside, a trend to the upside, a trend to the downside. So over here, we've not been below this level for a long time. And I keep saying this a lot. Levels that are key, you should pay attention to how we are approaching them. How did we approach this level? We approached it in the form of this diagonal wedge. I'll go to the 1 hour daily chart to show it much better. But expect some resistance over here, some support, at least some correction to pull back up before we get any directional bias on this one. And if I go to the daily chart now to show you what I'm really looking at. Daily chart, this is the pattern that came. I have to zoom in to show you the patterns that are forming here. So clearly you can see that I said down here, if we get a solid pin bar close on this level, expect to see a rally. That is exactly what we got yesterday. So I normally use a lot of charts looking at price action. The price action that's forming is very important because that is the data that I can see and everyone else in the world can see. So a pin bar basically means a rejection of a certain level. That's what we got yesterday, and we closed back above. So expect, using the daily time frame, a rally at least back to this level, okay, back to the trend line, okay. So I'm not really counting on a break of it. I'm just expecting it to retest that level, okay. And if I go down to my 4-hour chart, remember what I was saying, I had a trade earlier on this one, I got stopped out and then I came back in. So I still had my same bars. Earlier on I had, I think, I'll get rid of this to show you what I was watching. I had something like this. So I had a trade over here. So sort of this sideways movement, this breakout and this retest. So I took a trade on this retest. Market started going according to my analysis, and all of a sudden we got that fall to the downside. And I think this basically came in Monday and yesterday. Market fell, but still if you extend this, it was again still a retest of this one, okay? So that's what I was saying. My bias was still correct. It's just that market went to extended level, got this sort of a double bottom down here. So you can see that rejection, closed as a pin bar. Immediately I saw this pin bar, that was a no-brainer. I took that trade to rally it to the upside, okay? So while I was saying this is against what I normally trade, I don't really trade a lot against the trend because it's normally hard to get that entry. Like what I was showing here, I got that entry here, market still went further lower. I've gotten another entry here. Do not be surprised to see this market still going further lower because we haven't broken the formation of lower lows and lower highs, and that is why I have this trend line. Unless if we get now this breakout of this level, I have two targets. I'll be targeting this previous resistance level. If we get a break of that, then ultimately I'll be targeting this, nothing against that. So I've gotten that entry around there. I got it around the 1.2050 level. Let's see how that runs, looking for a 300 pip move on that. If I go to Aussie dollar, but before I go to Aussie dollar, let's look at US oil, because US oil moves in tandem, inversely proportional to USD CAD. Okay, so let's look at that. Let's go to the daily charts. So daily chart, this market actually broke a very key level. Okay. If I zoom it out so that you can see it much clearly, you can see this previous resistance up here. Market came, respected it, got a break, a rejection to the downside. But recently, if I zoom in, we've sort of gotten that breakout. Okay. But as I keep saying, how are we breaking out? Are we breaking out with momentum or with just sideways movement? And currently for me, I'm seeing some bearish momentum coming on this one. We've gotten that breakout, but that follow through is not really coming in. I'm not seeing that momentum. And if you extend just to look at the resistance levels, you can still see that this is a double top formation. You need to pay close attention to such. Let me use. So if you look at this level where the wick went, okay, so previously I was using the body. Okay. Previously, I was using the body, the close of these bodies. We got a breakout of that body, but we've gotten a push to this level where the wick went. Okay. So if I got the 4-hour chart so that you can see it clearly, we've gone in the formation of put this on the daily chart only. The formation of a sort of a channel-like formation. Okay. So you can see that top. Okay. Is currently what we got here. So massive rejection is what I've written. Massive rejection after slightly creating new yearly highs. So we created new yearly highs over here, but immediately we got that rejection to the downside. Okay. So if we do not get a continuation of that momentum, then expect market to respect this formation and really drop here henceforth. Okay. So that's just a bias I have. According to my market structure, that is what it's giving me. I'm a very good trend follower. I follow the trend no matter what, but I cannot discount this fact that market can reject this level because on the weekly chart, we haven't yet closed. We'll have to get a close of this weekly chart. Okay, I got the weekly chart. I have to get a close of this weekly candlestick before I submit to the bulls getting a hold of this market. We can get a strong rejection back down here, just like what we got here. But till then, if this week closes above this level, then I'll be expecting that continuation run. But if not, I'll be expecting some correction. If you go to UK oil, which moves in tandem with this one, you'll get to see that we haven't even broken those highs. Okay, so we've broken over here. Okay, so same thing, just like what we're seeing on oil, we have that channel formation. We've gotten this breakout. Unless we get that solid close of this one on the weekly chart is what I'll be expecting market to continue. But still then, you might see market at least respecting this level before we get any movement to either side. So that's what I have on the oil pairs, the commodity pairs. So if I go now to Aussie dollar, what I wanted to show, Aussie dollar sort of creating some bearish momentum. I remember I shared this on Monday, daily chart. So let's just start daily chart, top-down analysis to show you what I'm looking at, my thought process. So remember, that's what's key. What's key doesn't really matter if I have a trade running up or down, or if I get a win or a loser. What really matters is your thought process. Because on this trading, we keep saying you'll be wrong so many times, you'll be right so many times. But what really matters is your thought process and how can you repeat that day in, day out. Okay, so I have this channel-like formation. You can see the respect of the upside 2 times, and also to the downside. You can see this rejection over here and a support rejection over here. So you can see I told myself, this is just a reminder to myself, this is a region I want to pay a lot of attention to, but I cannot discount this CTL up here. Okay, so for this to be a strong momentum to the upside, I want to see a breakout of this counter trend line as well as this resistance level. I want to see a breakout above that and market rallying to the upside. Until then, I'll be targeting now the 0.80 level if we get that break. However, I said over here, pay attention to this level, which if you go to the 4-hour chart, you can clearly see it. Okay, so this is the counter trend line I'm watching. I have to pay a lot of attention to it. So you can see lower lows, a lower high. This can be a quick ABC correction. Okay, expecting a C down here. Market has been within this sideways movement for the longest time possible. Look at this sideways movement. We had that breakout, but ever since this was since mid-April, we've been moving sideways. So mid-April, mid-May, marking a month, and now we're almost heading to mid-June. Okay, market has just been within this sideways movement. So on this pair, I haven't had many trades on it. Remember, I'm a trend follower. Since market hasn't been moving anywhere, I haven't had any trades. Remember I said I had one trade here with this bullish run to the upside, and I had another one somewhere here. But anyway, market has been really moving sideways on this one. So what I'm watching is this two significant support and resistance level. A break to the downside, a very good indication that this market can really fall to the downside. But if you break above here, break this counter trend line, a good rally can follow through on that one. So I don't have any trade running on this one. I'm still waiting for a proper analysis. 1 hour chart gave me a good, there's a good channel like formation over here. Okay, so you can see this first touch, second touch, we got this third touch, and look at these massive rejections of this level. So you always want to pay key attention to those levels. Are we closing? Are we not? So basically, if you're a reactive trader, immediately started seeing market going above this level, you immediately bought. But personally, I respond to the market. I don't be reactive to it. So I normally wait for candlestick closes. I always have to wait for that to give me a good indication. This was a good short level. People who got that short, this was a 30 pip. Market has moved 30 pips since it closed from this level, and it can continue falling further down. But something I'm paying attention to is this moving average. As much as market has been moving sideways, we've also been respecting this moving average. Okay, it's been acting as a strong support. Market hasn't really been closing below it. It closes but comes back above it. So you want to pay attention to that as well. So with that said, that's what I'm watching on that one. Don't have any trade running on that one. Gold. So people who trade gold, let's go to gold. I think this is the last pair I'll do. Then I'll look at dollar index as well. Gold, this short has been quite tricky. The market has been forming higher highs, higher lows for the longest time. If I go to the daily chart, what you're basically looking at is we've come into a level where market is not really getting much momentum. So for the past few days, you can see previously we had these strong bullish runs, okay? Strong bullish runs, but ever since we got to this region over here, we've been having sort of doji formation, spinning tops, shooting stars. Market hasn't really been forming those strong trend lines. And if you go to the forward chart, you can clearly see that market is within this structural form, okay? You can basically see the structure that's forming, okay, with this first touch, second touch, third touch, fourth touch, not really getting that strong momentum to the upside. So also on this one, I might be watching for a correction. Of course, I won't bet on trading that correction myself. If the market does fall, I'll really be looking to buy this market because I believe gold is in a bull market currently, which has just begun. We'll be looking for targets around the 2,300 level of my ultimate targets to the upside. So I'll be watching this keenly. I don't have any trades running on this one. If I go to the 1 hour chart, I'm just watching what the market is doing closely. The structure that has been forming are quite clean, been forming higher highs, higher lows. This is on the 1 hour chart, much clearly seen. You can see this sort of a wedge-like formation. Something that you should not discount. Do not be surprised if you see market come all the way to this extended level, okay? So the trend is normally your friend. Do not be surprised if you see market shoot all the way to 1950 before we get a strong correction, okay? So watch that. You can see we're getting sort of these touches over here, a touch here, a touch here, and a touch here. But if we break below this level, break below this previous weekly lows and weekly highs over here, this is the 1890 level. A strong close of that below can cause this market to really drop. And normally we normally see this a lot. If you've traded gold for some time, normally after getting into corrections like this, there's normally momentum coming, okay? So expect that momentum to come either to the upside or to the downside. But whichever side it will come, it's going to be a powerful move on that one. So use good risk management on this one because I've seen many people blow accounts with gold, okay? So that's what I'm watching on gold. Last but not least, you have to pay attention to the dollar index. That's forming quite some good patterns. I got the daily chart. Daily chart, same thing like what we're seeing on USD card, a lot of sideways movement, okay? So you can see this support over here, market unable to break such. So as I keep saying, why are we not breaking? What pattern is forming? And you can see yesterday we also got a pin bar close, which is giving me more confirmation of my USD card long position. A pin bar formation can cause this market to really rally, okay? So if you go to the forward chart, we sort of had that wedge-like formation which market is currently breaking, okay? So if I zoom it out, You really want to pay attention to that wedge-like formation. So market is unable to really go to lower lows. Okay, and the level that is really holding is this previous support that I talked about. See, this previous rejection is what was saying we need to pay attention to it over here. Market sort of got that breakout. So we got this breakout, but as I keep saying, there's no much momentum follow through. What happened? A quick rally back above, then market retested, and now we're getting sort of that bullish momentum on this one. Remember, I said ultimately, if we get that correction on this one, expect market to come back to this previous. It was a resistance, got that break, acted as support, we got that break below, then acted as resistance. So expect market to rally back to that level. Okay, that's I think the $91.5 mark. And with that said, I think I'll end it there. Those are my few analysis on those pairs, just a rough analysis looking at them. Of course, also do analysis on the crypto markets. I have long-term trades, not trades really, but investments in those ones. I'll be holding them for the long term. Do an analysis on that another day. But basically, that's what I have today. I hope you enjoyed the analysis. I'll post this one on YouTube as usual, and I'll see you guys soon on Friday when we have our next analysis. So that's it from me. See you soon.